Hello people, welcome back to another one of my videos. If you are tuning in for the first time, my name is Chris. I have been trading Forex exclusively for a while, but I am looking further into indices and what they have to offer. I created this video to share that information with you. If you are interested in trading indices, this video will explain what indices are and why you should trade them, demonstrate how to trade indices on the MT5 trading platform, and also show you how to open your own trading account so that you can start trading indices too. Also, if you stick around to the end, I will share a special promo code that you can use to get started. So let's get straight into it. I am not going to be talking about any indices trading strategies here. There are other videos that dive deeper into that topic. Check our YouTube channel if you want to learn more about trading. What this video will help you with is to decide whether you want to trade indices and how to do that. You will find this video even more useful if you already have a basic understanding of trading. Whether trading indices exclusively or as a complement to your trading, a good place to start is to better understand what indices are. What we refer to as indices is otherwise known as an index that is made up of individual stocks. The indice's performance or price is calculated from the underlying prices of the constituent stocks. So, you are trading a group of stocks, and if they perform well, the indices should rise, and if they don't perform so well, the indices should fall. It's as simple as that. I will show you how to create a trading account and download the platform in a moment. For now, let's take a look at some common indices that you can trade on the MT5. When you open the platform, all the symbols that are available for trading might not be populated for the first time. So the first thing to do is to put them in your Market Watch window. To do this, right-click anywhere in the Market Watch window and select Show All from the pop-up menu that appears. If you are not interested in cluttering your Market Watch window with symbols that you have no interest in trading, then just select Symbols. From here, we can see what symbols are available to trade on the MT5. There is the Dow Jones Industrial Averages. The symbol on the MT5 platform is DJ, but it might vary between brokers. Then you have the S&P 500. The symbol for that is the same as the name, and this is the top 500 companies in the US. The Nasdaq is also available with symbol NAS. These three indices are the most widely followed stock indices from the US. They constitute stocks that are some of the largest and most well-known companies in the world. Then we have the top indices from Europe. There is the German DAX with symbol DE30, the FTSE 100 from the United Kingdom with symbol UK 100, and the Spain Stock Market Index with symbol ESP35. You can also trade the Euro Stoxx 50, which are the top 50 stocks from Europe. And lastly, there is the Japanese Nikkei, which constitutes the top 225 companies listed on the Tokyo Stock Exchange. The Hang Seng Index with the top 50 companies listed on the Hong Kong Stock Exchange, and the ASX 200 with symbol AUS 200 from Australia. Trading these indices gives you exposure to the broader stock market's performance for the respective region. Now, let's dive a little deeper into indices trading. At this point, as long as you have an active demo or a funded live account, you can start trading indices. However, there are some important things you should be aware of before doing so. The first thing is that indices are generally volatile. If you are used to trading Forex, the level of volatility might surprise you. The second thing is that the same lot size or volume for an indices trade compared to the same lot size for a Forex trade can mean different pip values. It depends on the broker you are trading with, because the minimum number of indices contracts that you can trade will vary from one broker to the next. These two things together can result in fast profits or losses. But the good thing about trading indices with TIOmarkets is that the contract specification has been highly fractionated, which means you can trade 1/10 of a contract for even better risk management. For those of you that are familiar with Forex lot sizes and pip values, you won't notice any difference. If you are new, it is best to check the contract specification before you start trading. This is how you do that. Right click on the indices or the symbol in the Market Watch window and select specification from the pop-up menu that appears. A screen will pop up with a full description of the symbol. This will change between brokers, so it's important to check this first. What you should be interested in are the times when the symbol is open for trading, the costs involved, and how much will be bought or sold for the lot size you select to trade. So for example, you can clearly see at the bottom the times that quotes will be streamed through the platform and the times that you can trade this symbol. For the costs involved, it is $5 per lot for the DJ as standard, and it will probably be the equivalent for other indices. This can come down to $0 per lot on the VIP Black account, which is TIOmarkets flagship account type. I can also see that the spread is floating, which means that the spread is variable. You can add that column to the Market Watch window too. Just right click anywhere in the Market Watch window and go to the columns option at the bottom and make sure spread is checked. Now you should be able to see the real-time spread for all of the symbols in the last column here. Remember that this is being displayed in points. So 270 points is 2.7 ticks in the indices price. In the stock and the indices markets, price changes are measured in terms of ticks. Both the spread and the separate fixed commission must be taken into account as a cost of trading, and that makes up the cost to open and close your trades. There are other costs too, and these are related to the duration of the trades. So each trading day that you maintain your indices position, a swap fee is calculated. This is basically a financing charge and only comes into effect when you roll over your positions to the next trading day. If you are a day trader and close your positions before the next trading day, swaps won't apply. But on Friday, a 3-day swap is applied where the swap will be triple what it usually is. This is to factor in the weekend as the market is closed. The swaps are calculated in points and the amount depends on the lot size. I'm going to talk a little more about that now. Now I will explain how to calculate the tick value for the lot size you are trading. This is one of the most important things you need to understand, because a mistake here can mean the difference between risking too much or too little. The contract specification shows us a contract size of 10 and one lot or 1.0 in terms of volume on the MT5 platform is equal to trading 10 contracts of the Dow Jones. One tick is a full change in the indices price, and this refers to the digit before the decimal place. So if the price goes from 35,000 to 35,001, the price has moved up by one tick. When you trade 10 contracts, it would be the equivalent profit or loss of $10 per tick that the price moves. If this was the FTSE 100, one tick from 7,000 to 7,001 would be the equivalent profit or loss of £10. Since the FTSE 100 is priced in terms of British pounds and the Dow Jones is priced in terms of US dollars. That is also something you need to be aware of, because this will affect the profit or loss you will see in your account. So if your account's base currency is denominated in US dollars and you trade indices denominated in euro, then your profit or loss will be calculated at the current rate of exchange between the euro and the US dollar. If you trade the German DAX and your account's base currency is denominated in euro, then no exchange rate will apply to your profit or loss, since both are denominated in the same currency. You can also trade fewer contracts by reducing the lot size and go as low as 1/10 of a contract. The minimum step value here you can see is 0.01, and this is the minimum you can trade. So when you select 0.01 lots on the platform, you are trading 1/10 of a contract, and the tick value will be about 10 cents per tick. This is what I was referring to earlier when I said that the indices have been highly fractionated. You can get started with a relatively small amount of money because you can trade in smaller fragments of a full contract, despite the leverage that is available. And that is also important to know. How much money you need in your account to open the minimum trade size. The contract specification says the initial maintenance margin required is 0.01, which means 1%. So to open 1/10 of a contract with the minimum, which is the minimum, you need 1% of the value of it as a margin in your trading account. So for the Dow Jones, 1/10 of a contract has a face value of about 3,500 at the current time. 1% of that is about $35, and that is how much you need to open and maintain the minimum position size. I know this might sound complicated if you are new, but I will explain it in simple terms for you to take away. 0.1 lots in trading volume on the platform is one indices contract. When you trade one contract, a full tick in the price in the indices will be worth 1 unit of whatever currency the indices are denominated in. US indices are denominated in US dollars, European indices are denominated in euro, and so on. To open the trade, you only need 1% of the value of the contract in your account as margin. Okay, we got there now, and now you know. Let's open a trade together so that you can see how this works. And there are a couple of ways that you can do this. The first way is to simply click the new order button in the toolbar at the top of the platform. Once you click that, a new order window will appear on your screen, and the symbol will be set by default to whatever chart you are looking at the current time. You can change this, but for now, I'm going to show you the example using the Dow Jones. Then you have some options regarding the type of execution that you want to place. So the first one is a market execution, and this simply means that you will buy or sell at the current market price at this moment. Whatever it is now, the trade will execute. Or you can select a pending order. If you want to select a pending order, you will further have some other options, okay, with regards to the type of pending order. So the first one here is the buy limit. What this simply means is that you will set an order to buy at a price below the current market price. If you select a sell limit order, you will select a price to sell at above the current market price. You also have a buy stop, which is an order to buy at above the current market price. So as the price is rising and triggers your buy stop order above the current market price, it will execute your trade. You also have a sell stop order, which is an order to sell at below the current market price. So as the price starts falling and it reaches your sell stop order, it will trigger you into a sell trade as the price is coming down. Further to that, you also have a buy stop limit, which is an order to buy at above the current market price at the price that you specify or nothing at all. And the inverse is true for the sell stop limit. So that's an order to sell at below the current market price at the price you specify or nothing at all. For this example, I'm just going to stick with the market execution. So from there, you have some options with regards to how many contracts you want to sell. Okay, so 0.01 in terms of volume, that's 1/10 of a Dow Jones contract. And the step volume, as I previously mentioned, is 0.01. So it means that I can increase or decrease my volume in increments or decrements of 0.01. So I could go 0.02, for example, or 3, or 4, okay, up to 0.1. That's one Dow Jones contract. 1.0 is 10 Dow Jones contracts. I can also set a stop loss for this trade or a take profit for this trade. I can do that before I execute the trade, or I can modify that afterwards. Then you can enter a comment on the trade if you want, but that's not commonly used. And then just simply click sell by market or buy by market. And this is going to execute the trade at the current market price. So that's one way of doing it. Another way of doing it is to use the trade panel. If this is not enabled on your chart, just simply click this button here to enable it, to view it. And you can modify the volume from the field here, and then just simply double click buy or double click sell to execute a trade at the current market price. Once you've executed the trade, your deal will open at the bottom of the platform in the terminal. Okay, from here you can close this trade just by simply clicking this X here, or you can modify this trade, and there are a couple of ways that you can do that. The first way to modify the trade to enter a stop loss or a take profit is to right click on the deal record and then select modify from the pop-up menu that appears. Or you can click, hold and drag on the buy line or the sell line, depending upon what trade that you have executed, and click, hold and drag. So if I click, hold and drag from the buy line and drag below the buy line, it will set a stop loss for me. If I click, hold and drag above the buy line, it will set a take profit for me. So here I can let this trade run. From here I can let this trade run, and either my stop loss is going to get triggered and take me out of the trade at a loss if the price reaches there, or if the price reaches my take profit order, it will trigger the closure of the trade so that I can take the profit of the trade. Or I can just, as I've previously mentioned, just close the trade at will. It's as simple as that. Let's recap with a quick summary. Trading indices is like trading a group of stocks together. You invest or speculate on the overall performance of these stocks. If they do well, the indices price should rise, and if they don't do well, the indices price should fall. You can trade a variety of indices that will give you exposure to stock markets in different regions of the world. There are also fewer symbols to focus on, which can make your trading more manageable than, let's say, trading individual stocks or Forex, where there are more symbols to keep track of. There is usually less leverage available when trading indices than there is when trading Forex. This is not necessarily a negative thing, because trading with higher amounts of leverage can be risky. The good thing about trading indices with TIOmarkets is that you can get started with $50, and you need less than that to open a deal with the minimum trade size. You can trade indices to diversify your trading, or focus on them exclusively if you prefer. Indices are generally more volatile compared to trading Forex. You can potentially make money faster, but also lose money just as fast as well. It is important to check the contract specification on your broker's platform to better understand costs and the minimum trade sizes. And lastly, make sure you are sufficiently capitalized for the lot sizes you intend to trade. And that just about wraps this video up. But before I go, I said I would show you how to open your own MT5 trading account and give you a special promo code to get started. Visit www.TIOmarkets.com and click register to register a new account. Fill out all of your information and continue next until you reach the secure client portal. From here, you want to go to Open Live Account and then select MT5 as the trading platform, VIP Black Account as the account type, then choose your account-based currency and the leverage. Make sure that you have checked the box that you have read and acknowledged the terms and conditions. Then click Open Live Account. You will receive an email with your login credentials so that you can log into the MetaTrader 5. But before you can do that, you need to download and install it. So head over to the download center and download MetaTrader 5 to your computer or your smartphone. Then click deposit and choose whether you want to deposit in your local currency or crypto. Deposits with a credit or a debit card, they're instant. So enter all of your information and the amount of 500. But before you click the deposit button, enter the promo code YT500. This will allow you to get the VIP Black account for $500 instead of the usual $3,000. If you already have an account with TIOmarkets, you can still use this promo code to upgrade your account. Then go to Manage Funds and transfer the funds from your TIOmarkets wallet to your VIP Black account. And that's it. You can start trading. I will catch up with you in the next one.